Hi guys, good morning and welcome to this new year special video on how to mark important levels on your chart. Time is now 8:15 and market opens at 9:15. Still 1 hour to go. Already I am on my trading system, and if you are curious to know what I am doing 1 hour before market opens, then you should watch this video till the end, because in this video I will be explaining what I do before market opens. Before market opens, I mark important levels on my chart. I look at the support level, I look at the resistance level, I look at various important locations, and I mark my chart before market opens. Why it is very important that you should mark the important levels on your chart? Because trading is just like real estate. You know that in real estate, price of the property depends on the location, right? The property which are at the prime location have a better market price than the property at not so good location. Trading also same thing. You should only trade whenever price comes to that important location. It can be support or it can be resistance. You should only trade whenever price come to those levels. That is what the difference between novice and a professional trader. Unlike novice trader, professional traders, they don't take random trades. They wait patiently and they will trade only whenever price come to that location. So that is what the objective of today's video. In this video, I am going to discuss about what are the important levels or locations I mark on my chart before market opens. So watch this video till the end so that I'll explain all the levels, why I mark it, and what is the importance of that level and how to mark it on your chart. So without wasting much time, let's move to my trading chart and let us see how I mark important levels on my chart. Okay, now let me show you what are the important levels I mark on my chart. Let us start with the first one, PDH PDL. PDH PDL is very simple. Anybody can mark it. That is previous day high and previous day low. One of the very important levels on your chart, that is PDH and PDL. Next one is supply and demand zone. Very important. The most important when you mark this level, because supply and demand zone is nothing but footprint of big institutes, footprint of big players. This is the level what will tell you where are the buyers, where are the sellers. So these are the levels where big players either they bought or either they sold. Okay, that I'll show you on the chart. Swing high and swing low, this is nothing but same like supply and demand only. The difference is time frame. Supply demand zone on the smaller time frame, swing high and swing low only on daily time frame. Okay, you should see it only from daily time frame. Next one is gap borders. Why gaps are important? Because they say markets don't like gaps. Markets don't like gaps. In technical analysis, they say markets don't like gaps. So most of the time gaps get filled. So if you see there is a gap here, most of the time these gaps get filled, but even though before it can get filled, most of the time this gap borders can work as a support and resistance. So that is why I also mark gap borders on the chart. Next one is virgin CPR. The CPR which is not penetrated is called virgin CPR. The CPR where candlestick did not penetrate inside, then it is known as virgin CPR. That I mark on my chart. Then I mark on my chart turning points. Turning point is a place where breakouts or breakdown happen. So if I see a big breakout happened on previous day or a big breakdown happened on some level, either breakout or breakdown, then I mark this as a turning point for the next day. Then CPR and pivots. Why I mentioned this at the end? Because this CPR and pivot points automatically come on your chart once market opened at 9:15. 9:15, the moment market opens, you can see this. Other levels are you have to manually mark. But today I am going to show you how to mark these levels on your chart. Okay, let's move to the chart now, and the chart what you are seeing here is on 30th December chart, and I am going to mark levels for 31st December. So I taken the screenshot before market opens So I will show you what all the levels I mark on my chart on what basis. First I said PDH and PDL, right, which is very simple one, anybody can mark it. So that is previous day high and previous day low. So this is the PDH and this is the PDL, right. So I mark it very simple. This is PDH, PDL. If you are a price action trader, then it is very important that you should mark both the levels. Some people even mark previous day closing also, but I don't mark it. I mark it on PDH and PDL. Okay, that is the two important levels. I mark it on my chart. Next one I said, the most important, which one I said, the most important you should know about the supply and demand zone. You should know how to mark supply demand zone. So that is what I will be showing you now, how I mark it on my chart. Now let us go back to the same chart and just look at this chart. Can you tell me where is the supply and where is the demand zone on this chart? Where is the supply, where is the demand zone on 30th December? So that you can mark it on 31st December. Now for that supply and demand zone, not only 30th December, you should go back to 29th. If you want, you can go back to 28th, 27th. Okay, not necessary it has to be only previous day. It can be previous to previous day. You should go back on your left. Go on your left. Look at your left side of your chart. Then you will get an idea where was the supply, where was the demand. Now let us see on 29th what happened first. Then we will come to 30th. 29th market opened with a bullish candle and started going up, started facing resistance, and you can see that big crash, right. There is a big crash here, and suddenly from this level it started bouncing. So now what is the supply, what is the demand here? This level is your supply zone, this level is your demand zone. So 30th, what you have done, 30th before market opened, you marked your demand zone, right, and you marked your supply zone. Now what happened on 30th? First candle made a big bearish candle and broken this supply zone. So once it has broken and started going down, it became invalid. This supply zone is not a valid now because that supply zone is successfully broken, right. Now what is still a valid? Valid is your demand zone, and that is what happened next day. It came exactly near that demand zone, and like how last time it bounced, same level again it bounced. So this is what your demand zone for next day as well. So this is your demand zone. This is your demand zone, right, where previous day market bounced. So this is the level I'll keep an eye on. Okay, and demand zone you can mark it any color, but always mark every level different color. For example, previous day high, previous day low, normally I mark it with the black color. Demand zone, normally I mark it with the green color, because in the live market it is easier to know where is your supply demand. The moment you look at your chart, the moment you look at the color, you know that that is your demand zone, right. Now what about the supply zone? Demand zone we marked. Supply zone, I told you that this was the supply zone which became invalid once that level was broken previous day. Now what is the supply zone for 31st? Now for 31st, this was your supply zone, because this is where market opened and made a big bearish candle, right. Then again it bounced, again it went till here, and again market started going up. This was your supply zone for 30th December till 3 o'clock. Then what happened? That supply zone was broken here. It tried to go up, but sellers become very active that they push the price down, right. It broken the day's high, but it could not sustain. So it was a fake breakout, right. Breakout failed. So what it tells you? So if you apply your logic, It tells you that this is the place where there is a strong sellers. Strong sellers are actively present here, and this is your supply zone. Okay. Now this entire level is your supply zone. What I'll do, I'll mark that level for the next day, because this is going to be the very important level I will look for. I look for this level whether it holds or it breaks. Okay, this is the important level where I am expecting resistance here. Now again, coming back to the supply zone, you should know that supply zone, once it is broken, then it becomes your demand zone. That is same logic. Support becomes resistance, or resistance becomes support. Okay, this supply zone was broken here. The supply zone was broken here with this candle, but it could not sustain and it reversed. It broke that breakout line, right? And then market closed. But instead of breaking the supply zone, had this candle started going like this, then you know what? This level is no more important, because that level is successfully broken and that level is not important. But what happened? That level only broken for few minutes and then again it reversed. So that clearly says that there are strong sellers actively present here. They are not allowing market to go up. So for next day, for me, this will be the most important level to look for in Nifty. Okay. Having said that, if you ask me whether I am expecting market to break out or it can reverse, what I expect market to do, if you ask me, I am not in the favor of breakout. I am not very much favorable on going long even though this level breaks. You know what is the reason? Reason is I looked at the CPR for 31st December and Nifty had a wide CPR like this. Nifty had a wide CPR. Wide CPR means it is more likely sideways day. Okay, I am expecting it to be sideways day on 31st December. I am not expecting it to break this level and keep going up. Okay, so my expectation is to reverse from that supply zone. As I said, this is your important level which you should keep a close watch on. Wide CPR means, if wide CPR means likely to be sideways days, and narrow CPR means likely to be a big day, either on upside or downside. Okay, so that is what CPR analysis says. So I have not marked CPR on here, but when I have done the calculation, we are going to have a wide, very wide CPR on 31st December. Next one, I said swing high and swing low. Swing high and swing low you should see only on daily time frame. This is more like a supply and demand zone only, but only thing is that time frame will be different. And gap borders. You should know that swing high, swing low and gap borders both should be marked on daily time frame only. Now let's go to daily time frame chart. I have taken the screenshot. So this is the daily time frame chart of Nifty. Now this is where yesterday's candle. Today's candle has not yet opened because market has not yet opened. Now where is the swing high and swing low? Before swing high, let me show you about swing low. This is your swing low. Okay, this is the swing low. Now what about the swing high? This is the swing low. What about the swing high? If you ask me, in the strong uptrend market, very difficult to get swing high. Okay, strong uptrend market. So there is no proper swing high here. Had you asked me about this day, if there was no candle here, there was no candle here. Okay, then it was easy to say this is your swing high, this is your swing low, but there is no proper swing high here. For example, if market reverses from here today,
and again after few days starts going up, then I will say this is your swing high. But instead of that, today also market starts going up, makes another bullish candle like this, then there is no swing high. This is not a swing high. So this is something you should remember. Next one I said virgin CPR. CPR which candles did not penetrate inside, that is called virgin CPR, right? Now let's go back to the chart and let us see is there any virgin CPR. This was your virgin CPR on 30th. 30th December, you had a virgin CPR, right? This was your virgin CPR. Virgin CPR means if there are no candlestick. You may say that, oh, there is one candle came inside. It's a just a wicks. It's a wicks, not proper candle. So still you can call it as a virgin CPR. So that means next day, this level, your important level, virgin CPR, where market reversed on 30th. So that means that virgin CPR still remains valid for 31st. So for me 31st, I am still going to mark this level as my virgin CPR. Now turning point. Turning point means a level where if there is any big breakout or breakdown happens. If there is a breakout, then it is called as a turning point. If there is a big breakdown happens, then this will be a turning point for the next day. Okay, so this will be a turning point which also can work as a strong support and resistance. Let us go back to the chart. Can you see any breakout, big breakout or breakdown? No, right? You can't see any big breakout or a breakdown happening on Nifty on 30th. Though there was a small breakout here, you can see that it broken the day's high, but it did not sustain because it reversed, right? It was a fake breakout. Had this candle started making big green, then I would have said this is my turning point for the next day. I would have looked for this level as an important level. Since that didn't happen, it reversed, so there is no turning point on 31st. So finally I said you should mark CPR and pivot points which automatically comes on your chart once market opened if you are using TradingView chart. CPR will come on your chart on 31st once market opened at 950. So since market has not opened, I can't mark the CPR, but if you want you can manually calculate CPR, and I manually calculated CPR which was showing me wide CPR, very wide CPR on 31st. So these are the important levels which I mark on my chart and I take my trading decision.
Okay guys, now you have seen how to mark important levels on your chart and how I mark on my chart. But remember, marking important levels is one side. You should also know how to read the chart, how to read the price action, and how to take the trade. How to take the trade near the support, how to take the trade near the resistance. That is where your price action skills come into play. And that is what price action skills can help you to know whether you should go long or you should short, whether you should be a bull or you should be a bear. So that is what price action is. So today's video I mainly discussed about how to mark important levels on your chart. I hope you have liked this video and you have learned something new in this video. If you want to learn more about price action, if you want to know how to read the charts, if you want to learn when to go long, when to go short, entry, exit, all this if you want to learn, then you can join my upcoming webinar on day trading with pivot points and price action. I given the link below this video in the description section about my upcoming day trading webinar. If you are into full-time job, you think that day trading is difficult for you, then I have a swing trading course also, which you can see the link below this video. If you are interested, you can purchase my swing trading course. So with that, I am coming to the last video of year 2020, and same time I take this opportunity to wish you and your family a very happy and prosperous new year 2021. And also I wish you a great trading career in year 2021. And also I would like to thank you all for your support in year 2020, where I crossed 1 lakh subscribers, and also I got my first award from YouTube. So with that, thank you all and I'll see you with a new video in next year. Thanks and take care.